Okay. Hey, welcome to Intro to Futures with Trader Bay. And I probably need to close Discord because my goodness, we keep hearing doo-doop, doo-doop. But welcome, welcome, welcome. So I've been trading futures now for, believe it or not, 8 months. 8 months. And futures, I just get it. I love that I get it. When I start to get something, I actually love to pass that knowledge on to other people. Hence the reason why we are doing this course tonight. So with that being said, we're going to get into our learning. I'm going to try to exit my Discord screens because they are distracting me and I just keep hearing doo-doop, 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 doo-doop. All right. But welcome to Intro to Futures. All right. So we're going to go back to the beginning slide. Boom. And now we're going to go to this one. And I'm going to go back to my well-prepared script that I have. Okay. So when you look at, well, this is where we were before I realized I wasn't recording YouTube and podcasts. When you look at the Nasdaq, when you look at the S&P, when you look at the Russell 2000, and when you look at the Dow Jones, you are looking at a group of companies. So you guys have heard people say, "Oh, the Mag 7" and things like that before. That's because and it's so funny when people have this realization when we're trading, they'll be like, yo, Nasdaq and Apple and Tesla is moving the same way." I have to laugh because it is so cute. I've heard that so many times, and it's like, yeah, baby, that's because they part of the Nasdaq. Like they are moving the same way, and I love a good day where Nasdaq and S&P are moving the same. As a matter of fact, I feel like I'm in the right the right reality, the correct timeline when they are moving together. When they move in opposite directions and all weirded out, we call that divergence. And that gets a little bit iffy, and sometimes people sit out days of divergence because they honestly should move the same because a lot of the companies in the S&P are also in the Nasdaq. And then the Russell 2000 has two thayao of them things. Okay. So that's why my joke is that's why Russell or IWM move so slow. Because imagine like toting all that, like 2,000 companies, like, and then trying to get everybody in on one accord. Like, no, y'all, we trying to drop a little bit. And then this other company's like, no, not really. So you'll look at Russell and you'll look at IWM and it'll just sit at a price point for like a minute. And you just kind of like sweating bullets, like, dang, like which way are we going? Like what? And then it finally makes its decision, okay, yeah, we gonna pop up about like 20 cent. Like, oh, okay, thank you. Thank you. So it's funny. Another thing that I have to say, same thing I said in the options course. If you haven't watched it, go to my YouTube. You need to learn your ticker. You can't get over on Russell 2000 for futures or IWM for options and think that you can act the way SPX does. Baby, SPX will whip you back and forth. S&P whip you back and forth. Russell 2000 don't like all that in and out, letting all the cool air out the house. She don't like that. That's not her style. Understand? She don't like all that ripping and running and running and ripping. She don't swing from chandeliers. Okay? She is very, very calm and relaxed, and she moves when she gets ready. And sometimes, just as far as she went one direction, she'll go back the opposite direction on the very next candle. You got to learn those things about trading futures and trading options. So tonight, I want you to challenge yourself to find a ticker and stick with it, okay? And I know you're like, but we still in the first slide, and you're talking. Hey, I got to get out everything that you need to know in 30 minutes. Bump my slides, okay? My slides are politically correctly put together, but I am not. I'm going to tell you what you need to know as quickly as I can on this free Zoom meeting, okay? So, the beauty of futures is that they all operate under the same basic principle. You're speculating future price movement of an asset without ever owning it directly. So, futures is never yours. You're yeah, okay, Nasdaq. From this point right here, I'm gonna sell this contract because I think you're not gonna go above this contract, baby. You're not going above this price right here, girl. From what I heard, word on the street is, Apple ain't doing so good, and Elon, driving parallelograms be driving backwards. So Nasdaq, I think we just gonna stay right here, and you gonna keep going lower. And word on the street is Elon is slew-footed and bow-leg. So yeah, boom, I'm get this contract, sell order. Next thing you know, with your technical analysis and word on the street, prices dropping, you making money. You don't worry about any Greeks over here. We don't do Greeks, baby. We don't do Greeks. This is almost like a goddamn technical college. It's a community college, baby. We not at the big college, okay, with the Greeks and the alphas and the AKAs and the deltas and the sigma gamma rho and the Q dogs or roof and all like that and the kappas and they sweet like candy. None of that. None of that. None of that. We don't have that at Futures Academy of technical institutions. Okay. We literally are very simple and clean cut over here. Now, when you go to options university, that 4 year college, yes, baby, you got Greeks and them Greeks will whoop you. Okay. So you better understand your Greeks. All right. So now we're going to go into slide number 2. I have to crack jokes because like if I don't, ill. Um, let's go. I bet y'all understand everything though. Why trade futures? 24-hour market access. They a lie. It's 23 hours. They a whole lie. A lie and a half. Literally, we open at 6 p.m. and we close at 5 p.m. and then they have like an hour maintenance. So, okay. High leverage potential, no pattern day trading rule. If you haven't heard of this, before I got myself in the correct account on Webull, they was like, girl, I was on, no, it was Robinhood. Robinhood almost flagged me for pattern day trading rule because I was entering and exiting out of my positions in less than 5 days. Like I was, doing that zero DTE movement, but I didn't have my account approved for that. So if you've never heard of that before, make a note of it. Pattern day trading rule. I'm pretty sure all of you guys are in the correct account when it comes to that on options, but tonight we're focusing on futures, okay? I would love to explain that more, but I want to keep it pushing for y'all, all right? So, how futures different from stocks? Stocks, you own the asset. Futures, you trade a contract. Stocks, no expiration. Futures, they do expire. As a matter of fact, yeah, we expire. Yeah, you better have that sucker closed out by the time the market close, okay? Stocks, no leverage unless you have margin. And futures, it has built-in leverage. Stocks have the PDT rule, which we were just talking about, pattern day trading, and futures is there is no PDT. You can hop in and out the game as much as you like. That's another thing that I like about it before I get into all this rumble jumbo stuff that I got for y'all, is that with futures, you literally, I'd say to myself, see green, take green. See green, take green. See green, take, and you can. You don't have to sit there like options and be like, okay, I got $5 profit, but if I hop out now, I'm gonna eat up my buying power. It's none of that. It's none of that. So this is the way I like to describe futures versus options. Futures reminds me of a man, and options reminds me of a female. Futures reminds me of the planet sun, and options reminds me of the moon. It's like options has all of this complicated, complex. Is it really going to that strike price today, or are we going to go back and forth before we get there? Which one should I choose? How much volume is here? What's the theta? What's the vega? What's no? Futures is okay. Are we going up or are we going down? If we going up, we in a call, and if we going down, you in a sell. And baby, if we going sideways, you're looking stupid. Don't get up in the chopped and screwed, okay? Because you're gonna go up down up down up down. You're gonna sit there and you're gonna get tired. All right. So what are we doing? Up, down, or sideways? That's literally how futures treats you. And if you now, this is where you master futures. So I'm gonna put you on game and I'm gonna cut to the chase. I thought I was gonna do all the slides. But you master futures by understanding technical analysis and actually paying attention when people be on the goddamn timeline telling y'all bean heads how to find price action and how to see support and resistance and to see the trend and to understand the crossing of the EMA or the RSI, or if you use MACD, there's like 1,000,000,001 ways for you to be a skilled trader. But y'all be out here like, yeah, I'm gonna just get on a chart with hopes and vibes. And then when you get clapped, you, you be like, man, I had lost $800 on futures. Ain't no reason you should be losing no goddamn $800 on futures unless you trade the micro. No, is it the micro mini? No, the mini. Unless you're trading the mini at a high volatile time with no risk management included, which we will cover. Okay. And you're like, Danny, what does all of that mean? The mini contract of NASDAQ will pay you well. So if some of you are here because you saw where I posted plus $2,000, that's because I had traded a freaking mini. Okay, not the micro mini, just a mini. And it was to my luck that that mini dropped to the pits of hell. Now, I had technical analysis proving to me that this was a good spot to get in based off the strat, based off of where liquidity was sitting on the chart, based off of other, technical things that I know. I knew that price was supposed to go down, but baby, I didn't know it's gonna drop like that, baby. It went to hell in a handbasket, okay? And I was like, oh snap. So when I saw that green, I took that green so quick it made your head. I probably could have racked up 3,000. Who knows? But but I took that too and was like, geek, I got it. But I did that because I knew something else. Let me tell you the something else. I'm gonna put y'all on game without having to take the Trader Bay method, and y'all owe me. But the Trader Bay method, I actually teach you each one of these in extent. The things that will help you the most is where is support and resistance when you go to the chart. Where is the floor? Where have we not gotten past in about the past hour or two? We cannot get past underneath that point. Where is that? Then, where is the resistance? Where is the roof? Where is the spot that we cannot get above it to save our lives? Now, where you have that, typically liquidity sits on the other sides of those, right? But there's actually, okay, an indicator called SMC, Smart Money Concepts by Welo Trades, that you could pop on and it will confirm for you that that is truly where liquidity is sitting. It will show you buy side liquidity and it will show you sell side liquidity. You put it on TradingView, you take it back off. Let's get to the next point. When you're looking at the chart and you're simply looking at price action between support and resistance and the direction that it's heading, you can make an informed decision on, you know what, I think we're definitely headed towards sell side liquidity. The chart is going down. I am going to enter into my future contract at this point after we break through this resistance or at the break of my 15-minute orb. I'm going to get into this position and then I am going to hold it until we get to that point. So, what separates people who are profitable from people who are not profitable on futures is actually trusting their analysis. And if you're here and you haven't been profitable just yet, or you haven't made good money just yet, or you keep blowing through your evaluations, there's a high possibility that you actually don't trust your own analysis, which then uncovers for you as a trader and as a regular person that you've second guessed yourself on a lot of stuff in life. Right now, if someone came up to you and said, you know what, good job for holding on, you probably come up with 5 reasons why. Well, yeah, but I tried to give up back in 2021, and I really don't know where my life is going right now. I think I'm having a midlife crisis, even though I'm only 22, and I hope that I live till I'm 80. And I'm kind of getting these gray hairs, around the edges of my hair right now. And sometimes I wonder if I moved into the right city, if I'm dating the right person. And then also I wonder if I had went to college in Florida versus Georgia, if my life would have came. That type of person, it plays out in the chart. You got to be very confident. You have to be very cocky. You have to know that your methods that you're being taught by people, whether it's Love K, whether it's Brandon with F&P Trades, whether it's Big Sal, whether it's Jess of All Trades, whether it's Sierra Aaliyah, whether it's Lucci. I'm trying to name all the names. Rico's Way. I've heard of JT and then I've heard of TJ. Whoever's teaching, you got to trust these people. What are y'all paying them for? And why are y'all in their discords? And why are you soaking up information for them? But you can't trust how they're telling you to look at support and resistance, top tick, bottom tick, fair value gaps, 50% of fair value gaps, the strat, ACE with all-time highs, the strat, etc. That doesn't make any sense. And if these methods are working for these people that y'all look up for, truly the methods will work for you. The only thing standing in the way of that is actually you. So now I need you to get with your mental tonight, tomorrow, and probably next 21 days or so, and make sure that your mental is right before you even start trading futures. If you're here and you've never traded futures before, I want you to paper trade for at least 7 days, at minimum 7 days from tonight. I want you to paper trade on TradingView. And I will walk y'all through the steps on a YouTube video on how to get to that. And I want you to practice every single day and every single night if you can. Practice 2 times a day if you can. Then I want you to, okay, well, let me see if I could pass a prop firm or let me see if I could fund an account. Okay. I want you guys to do that because you'll see a lot of the times price will move slightly and you'll be like, oh, nope, I'm out. I'm out. It says negative 30. I'm out. But you ain't got no patience. And I'm gonna be real with you. It's perfect to clap us up. I guess I'm not, yeah, y'all gonna read these slides later. This market is perfect to clap all of y'all, including myself, up. I'm talking to you guys from my experience. Like I'm fussing at the 1 month into trading me, the 2 month into trading me, because we all want everything to happen instantly. You guys don't want to wait for nothing. You don't have no patience. Y'all don't got no patience on relationships. Y'all ain't got no patience on friendships. Y'all ain't even got no patience on wigs. I don't want to sit in a chair all day just to get a wig glued to my head. I don't want to get braids. It's going to take 8 hours. Baby, welcome to the 90s where we knew half a day was gone for them box braids. Okay. And I understand. Oh, well, it's more efficient now. Things are much more efficient now and it should be quicker. But if you guys continue to think like that, I'm on y'all's behind. Okay. If you guys continue to think like that, you're not going to do good in trading. You're going to suck. And I love you. And that's the same thing for options. You got to be organized. You have to have patience. You have to be resilient. You have to persevere. You can't look at losing in the market as a real loss. You look at that as your tuition and understand that once you get it and once it starts to click and that confidence peaks and you're not on that, I ain't got no patience. Oh my God, oh my God, oh my God, that you going to clap the market for that times 10 in a day. Do you understand? So you guys really got to work on your psychology, and that's why I'm really focusing here for a second because I could tell y'all all the details, and you'll still get out there and still blow through an evaluation, still not do good, still mess up an account, and then be like, well, Danny said I could trade futures. I did, babe, but you got to work on the mental first, okay? Okay, bet. All right. So let's do this real quick. And then I swear I see like the chats going, but I'm not reading them yet. I'm coming back to them. So, how contract value works, we go by the tick size, the tick value, and we move from there. Okay. So, like NQ is $20 per point or 4 ticks per point, $5 per tick. That's why I love to trade NQ. That's the one that I traded. And when it plummeted, I was able to get so much. But I got to tell you guys, this is why I want you to practice paper trading. When you trade a micro versus a micro mini, the drawdown is, you really got to trust your analysis because you'll be sitting there looking at a screen that says negative 500 for about a good 3 minutes. And you got to sit through that. You have to feel comfortable sitting through that and knowing that your analysis is actually correct and that we are moving in the direction that you think that we're moving in based off of your analysis, the strat, ICT concepts, the 50% and all. You gotta trust it. And if you can't trust it, then go over to micro and trade one contract, one for $1.25. Get your feet wet over there. Stay over there. Stay over there for like 3 months, 5 months, 6 months, 20 months, girl. I don't care. Uh, just stay on micros, okay? Because the drawdowns on the mini is actually very, very challenging, but I've been making myself sit through that so that I can master that, okay? So, leverage explains small margin, big exposure. Example, a $500 margin controls $20,000. This has to do with when you go to Tradeovate and when you're going to these brokerages and you want to trade futures with your own money. And you know how they'll say it is required that you have this much margin. They'll say that you could trade with $50, but what they fail to tell you is they really want 500 or 1,000 in your account to be able to trade what you're going to trade because they give you a margin to work with. So I would say the safest thing to do, believe it or not, to start off with your micros. You could, I think, if I'm not mistaken, you could start off with $500 when you're trading 1 to 2 micro contracts. If you're going to do minis, those NQs, you need upwards of $2,000 to $3,000 in that account. You should have $2,000 to $3,000 in that account to protect you. Okay. These are the people that you're in the market with. You're with hedgers, you're with speculators and market makers that provide the liquidity. Okay. You are with a lot of different people. You're trading against people who've been trading before you were born. I can't stress that enough. This is why you got to follow what the market is doing and not try to predict what the market is doing, not try to tell the market what it's going to do, because you're trading with people that's old enough to be your grandmama and your granddaddy. And some of y'all, your great mama, great grandmama, and your great granddaddy. These people know trading like the back of their hand. They know the psychology of the market and the people that are participating. They know that ticker, and that's what you're trading with. So you want to stomp with the big dogs. You want to make money from your house on the computer. You got to stomp with the big dogs, okay? All right. So there's candle structure, there's volume and open interest, and then an example of a chart. We'll get to that in just a second, okay? I'll show you guys all of that in just a second. So we have trading sessions. There's the Asian, the London, and the New York. Asian is very low key, and shout out to Rain from Love K's Discord. Asian is the best one to trade in when you're learning. So when you start paper trading on Trading View, okay, for futures, please do it in the Asian session. If you're like, what time is the Asian set? Baby, I don't know right now because I have an indicator that's called ICT Kill Zone. Okay. And I pop that sucker on and it tells me what, I don't know it off the top of my head. I mean, I do, but my mind's going in 5 million directions to try to get this class done. So Asian is the best one to trade in. This one is half volatile and New York is unhinged. New York is unhinged. New York has ADHD, which I love ADHDers, and y'all are not unhinged. But what I'm saying is ADHD with anxiety, with nervousness, with borderline disorder. Like if I could yeah, as a psychologist, it would New York session qualifies for a lot of DSM fives, okay, and DSM six and sevens. All right, the future ones that ain't even come out yet. You hear me? All right. So New York, you really got to be laser focused. You really do. Risk management is my favorite spot. You need to have daily loss limits, but you need to know how much you're willing to lose a day and get step away. If you only want to lose $100 for the day on a micro mini and you've lost 102, close the laptop down. The market will be here. It will be here. Close it down. You guys need to get used to using limit orders, okay? Or stop limit orders. You need to get used to utilizing trailing stops. And you're like, well, what are all of these? So did you know that there is a way on your prop firm and in your accounts and NinjaTrader Tradeovate that you can ask for your order to fill at a particular spot, okay? And that the moment that it fills at that particular spot, that you would only like a loss of $10 after it hits that spot. Did you know that? You probably didn't. And that's why a lot of y'all are getting clapped. And I know options don't offer you that, but futures does. Options offer you OCO, where, one order cancels the other and it's kind of like a stop loss. But the trailing stop, et cetera, like we have a form of it where you close out contracts. If you take 5 spies, every time it hits one of your points, you close a contract. You close a contract to lock in profits. Well, over here on futures, we have something like that. You don't have to sit there at the chart and be ready to click and then be ready to jump out and inducing all of this anxiety and fear, etc. You don't have to do that. And so if you have multiple contracts on futures, let's say you're trading a micro of NASDAQ, yes, okay, and you took 3 micro contracts, you can literally set for a place on your chart that at this point, close out a contract. At this point, this next point, close it out. At this third point, close it out. And you're going to go, well, how do I know those points, Danny? I'm glad you asked. This is why it's important to understand levels. Looking at candles on a daily time frame, 12-hour time frame, 4-hour time frame, 6-hour time frame, 1-hour time frame. Looking at the candles that have really crazy wicks, were candles previously rejected from. This is how you can find your levels amongst other things, okay? All right. So, evaluations and prop firms. What are prop firms? There's like Top Step and there's Take Profit and Apex, and they have evaluations that are 50K. And your profit or your profit target is $3,000, and they tell you that you can only do a max of 2K drawdown. Once you hit $2,000 loss on your evaluation, boom, you're done. Now, most people go, why are they doing all of that? It's so stupid. I can't do, baby. They're doing that so that you can have a little bit of consistency and so that you can have some organization in your life, because it's actually beneficial to act like that even with your own accounts. So why do people like prop firms? We like them because it gives you more leverage. On any given day, most of us are not coming into the market with $50,000 that we could put into an account and then start trading futures. So what we're doing is we're proving to these companies that we are able to trade with their capital and able to make money and be profitable. They do understand that we'll have loss every now and again, but what you want to prove to them is that you keep the loss at a minimum and that you keep your wins at the top maximum. So the evaluations can run from $25 up to $500 depending on the top on the prop firm, okay? And they want you to show them consistency. Some say pass in as little as 2 days. Some want you to, work it out over 5 days. They'll tell you what their rules are, but this is why people like prop firms. It gives them access to more, and you're only paying the $30 eval and maybe the $100 activation fee. So $130 investment, now you have access to 50K to trade with, as long as you actually know how to trade, okay? Common mistakes as a future trader. Sometimes you guys over leverage, you're ignoring your margin requirements, or you emotionally trade and revenge trade. This is the one that gets a lot of us. I've done this before. I've done this before. I've done this before. I hate this. And when I feel this coming, I immediately get up from the computer. Ignoring margin requirements, I have a story about that. I'll share that on the podcast. And over leveraging, I have a story about that too. I'll share that on the podcast. Baby, I did all the common mistakes, okay? All right, so developing your future strategy. You got to combine structure and setups. Remember, I told you support and resistance, okay? And then also knowing where liquidity is, and that will help you so much. And that's the basics of it, but I could teach you more if you sign up for the masterclass that's coming up soon. Journaling and data review is very, very important. Discipline and confidence. Confidence, remember I talked about that. If you don't have confidence in yourself, if you're second guessing yourself, you're going to second guess the market. You're going to second guess your trades. Like I said, I've sat through freaking negative $585, but I was like, nah, I know where this price is going. Miss me with that. And I sat through it. And then when price went there, I made 1,000. Exactly. So futures gives you access to global markets 23/5. The most important things that you need to understand is that when you're over here on the future side, there are no Greeks. Okay. We are going to get in and we're going to get out. We are looking at the structure that is on the screen. You're either waiting for the cross of your EMA lines, you're looking at your MACD, you're looking at your RSI, you're looking at the strat setup. These are the things that different people use. You're looking at the kill zones to see what was the London low. And if we're going to sweep the London low, you're looking at the fair value gaps to see if we are going to utilize the fair value gap as support, resistance, or if we're going to just plow through it. You are looking at all of these things to formulate, okay, this is going to be the trade, and this is why I think this is going to be the trade. And from this strike price right here, I know that we're going down, so I'm going to click sell, and I'm going to use my risk management tools so that if this happens to reverse on me, because when we get to a certain, number, someone has $1 million worth of calls that are going to off put, then I've locked in profit because I used my trailing stop. Okay, so that's all of it. And you can trade NASDAQ, you could trade S&P, you could trade Dow Jones, you could trade gold, you can trade Russell 2000, you could trade crude oil, et cetera, et cetera. But I don't go all over there with the oils and all of them and the cattle and stuff. I stick, with the main indices and gold and silver. Makes life very, very, very easy. Okay. So this segment of this class, there's going to be two parts. I'm going to give you guys an option to come back and see like real time what I'm doing, right? This segment is done. I'm going to end this course here for both YouTube and also for the podcast show. I hope you guys enjoyed it that are listening in the near future. And if you did, make sure that you come over and check out Rich the Rich's Discord with me, Trader Bay, Dennis Bailey. I really appreciate you guys trusting me and giving me the opportunity to teach you this. A little delayed, but still here. So thank you guys so much. And to the podcast YouTube world, I hope you guys have a good night. And I'm going to go ahead and keep talking to whoever's going to stay. And we're going to get into some real market stuff.